Welcome to today's session happening on the ICICI platform. So today's session is titled as Introducing Small Cases on ICICIdirect. This is going to be a very interactive session in which we are going to basically we will be covering what small cases are in general. So all of you might have heard of this particular term, small cases, being used occasionally in the stock markets right now, and the usage of this particular word is increasing day by day. So we will try to understand what it is that we are referring to when we talk about small cases in general. And we'll also talk about some of the key benefits and some of the highlights of why small case investing is becoming a trend in India going forward. So we will be showing you some of these small cases, small case portfolios, and we'll also be talking about some of the key benefits of investing in such portfolios and maybe making it a long-term investment for your requirements. So that is going to be the key focus of this particular session. Now, let us start by taking a look at what exactly small cases are. So the first concept that we need to try to understand before we park money for investments is what is it that we try to gain out of investing in the long run. So for some people, it could be hyper growth. For some investors, it could be a balanced way of a balanced approach towards investing. For some investors, it could even mean ultra short-term trading. So with that said, let us first try to understand what small cases are. So small cases are nothing but a basket of stocks, which is based or which is curated based on a particular idea or a theme or a strategy in the market. So when we refer to small cases in general, what we are talking about in a very simplistic way is just a basket of stocks. Now, going by the definition, what does this basket of stocks basically mean? So let us try to think from an investor's point of view. So now let us assume that I'm an investor. Now, if I want to invest in the markets today, there are a couple of products and there are a couple of options available for me. One of them could be direct equity investing, where I pick up one or two stocks as per my choice, and I go ahead and park my investments, or I park my funds over there. But in the long run, what has been proven again over a long period of time is that the investment should happen in a diversified way. And this diversified approach towards investing happens through a variety of means. So one of them, or it happens through a variety of factors. So one of the factors could be risk diversification in terms of what kind of asset classes we hold in our portfolio. It could be diversification with respect to what sectors we are taking exposure to, or what stocks we are taking exposure to, or the next factor could be taking exposure to growth-based stocks or dividend-based stocks. It could be ETF-based investing and so on. So there are a variety of ways to go about investing in the markets. And small cases basically is a kind of a product that is available where investors using their own ICICIdirect account can basically log into the platform, choose any small case basket of their choice, and go ahead and invest in it. Now, what do we mean by that? So we have already understood on a very basic level that small case is just a basket of stocks. Now, how is it that these basket of stocks are going to get designed? So what is the underlying philosophy behind it? And how would a normal investor, for example, let us say that I'm an investor, how would I as an investor be able to perceive if this particular basket is going to fit my requirements well? So that is where, as a concept, small case stands out phenomenally well in the markets. So we are going to take a look at why that is the case going forward. So before we start, let us try to understand who creates small case baskets. So do we as investors create small case baskets, or does a research firm come and go ahead and are they able to curate their own baskets? Is any prominent personality who is in the stock markets going to come over and create a basket? So generally what happens is, in India, SEBI registered professionals are able to create these baskets on the platform. What do I mean by SEBI registered professionals? So SEBI gives out its licenses in three different fashions. The first one is an RA license, which we call as the research analyst license. The second one is an RIA license, which is the registered investment advisor license. And the third one is the PMS license, which is the portfolio management services license. So any particular person or any particular entity which has any one of these licenses can come over to the platform, get their approval, and then curate their own portfolio. So this portfolio or this basket of stocks, what we call as small cases, can be curated based on their own philosophies, which they have used at the time of creating this particular basket. So with that said, the next common question that we are going to ask ourselves is, what is the philosophy behind which somebody curates these particular baskets? So is it going to be dividend based? Is it going to be debt based? What is the philosophy, underlying philosophy behind these particular baskets? So to understand that, what we are going to do is take a look at a couple of examples. And before we take a look at the examples, let us try to understand, or let us try to explore what a particular investor can understand about these particular baskets. So some of the basic questions that anybody has before starting their investments are, first one, what am I going to invest in? What are the set of stocks, or what are the set of sectors that me as an investor is going to take exposure to? Similarly, once that particular question is addressed, the next common question that is going to come through is, what is the portfolio's performance? So this is the most underlying aspect of analyzing whether or not we are meant to invest in that particular portfolio. It could be any portfolio. So portfolio performance comes second. And the third important question that we need to ask ourselves is whether we are investing in a static portfolio or are we investing in a dynamic portfolio. So what we mean by this is, a static portfolio is a kind of portfolio where you invest in a set of stocks and you basically hold these stocks as long as possible. And a dynamic portfolio is one where you start your investments and the fund manager or the investment advisor who is taking care of that particular portfolio dynamically changes the asset allocation into different sectors. It could be into different stocks, it could be into different asset classes and so on, in order to keep the portfolio balanced and healthy in the long run. So this is what we call as rebalancing on the platform. So these are the three critical questions that we need to ask as investors before taking our journey into the stock markets, or before starting the journey of investments. So with that said, what we're going to do next is take a look at some of the examples on the Smallcase platform, some of the portfolios that are available on the Smallcase platform, and we will try to understand from examples as to what we are going to expect on the platform. So what kind of portfolios are there? What is the philosophy that goes behind designing these portfolios and so on? So the first example that we would like to give today is a small case, which is called as all-weather investing. So for those of you who are not aware, the platform as of today has about 400 plus baskets of stocks, that is 400 plus portfolios available. So we are going to cover only very few examples today, but we will try to give you a very holistic idea of what these particular baskets are all about. So taking a look at all-weather investing, let us try to take a look at what all-weather investing is. So as you can see on the screen, all-weather investing is a basket of ETFs. What we mean by ETFs is exchange traded funds, where this particular basket invests in three different asset classes. So one is equity, the second one is gold, and the third one is debt. So what do we mean by this? Any investor who wants to basically try to invest in all three asset classes available, that is equity, gold, and for example, debt, can go ahead and do that seamlessly by investing in a basket like all-weather investing. Similarly, now before we proceed, let us try to take a look at how these asset classes are divided. So if we take a look at the overall composition of all-weather investing as a basket, what we can see is three different asset classes and 4 set of ETFs inside of it. So if we take a look at equity as an asset class, we have Nifty 50 BC ETF here, and at the same point of time we have Junior BC ETF here. So Nifty 50 BC ETF has about a 17.8% weightage. Junior BC ETF has a 19.8% weightage. And put together, we can assume that the weightage of equity is roughly in and around 35% as of today, that is the 4th of March. Similarly, if we take a look at debt as an asset class, we take exposure to liquid Bs. So if you do not know what liquid Bs is, it's a kind of debt-based instrument where the price of the asset class does not fluctuate, but it tends to give out a nominal interest rate in the form of units to its holders. So this is a kind of a debt-based instrument that we take exposure to. And as of today, the weightage stands somewhere around 20%. So if we take a look at gold exposure, we have about 43% exposure to gold through Gold BCTF. So if we take a look at the overall composition of all-weather investing, out of 100, today we can see that gold is dominating with its exposure in and around 43-45%. And at the same point of time, we can see that equity has an exposure of in and around 35%, and liquid Bs has an exposure of around 20%. So as a basket, as a portfolio, how is it going to benefit us? And before we talk about that, is this going to be a static portfolio? Absolutely not. So these are the set of constituents as of today. So going forward, if the investment advisor who is managing this particular basket believes that more exposure needs to be taken to equity in the long run, and gold needs to be taken, gold exposure needs to be reduced because of the underlying belief that equity could do well, then the same can be done. So if the investment advisor believes that the markets are turbulent right now because of various macroeconomic situations, we are seeing some political instability happening. So if they believe that the markets could become volatile because of this, the equity markets, then the investment advisor can increase their exposure to gold through their gold BCTF and decrease their export and decrease this particular portfolio's exposure to equity. So this kind of a dynamic portfolio is what we refer to as small cases. And this process of allowing the SEBI registered manager to rebalance this particular basket as and when needed is what makes small case investing fundamentally different from a variety of investment products that are out there. So with that said, we will try to explore how maybe we as investors can capitalize on it. For example, as an investor, let us say that I want to invest in this particular basket today. What is exactly going to happen? How am I going to take exposure to these particular set of stocks? So the answer to that is going to be fairly simple. So as we were discussing, basically, how is it that I as an investor can capitalize on investing in a basket like all-weather investing? How is it going to work out for me? And what is the process of doing that? How is the process going to work? So to understand that, what we need to do is to basically come onto the platform and use our ISEC account to log in and invest in this particular basket. Now, what happens when I invest in this particular basket? All these set of ETFs, it could be ETFs, it could be stocks, whatever is there in this particular basket automatically gets picked up in my ISEC trading and demat account. So the benefit of a product like Smallcase is that there is literally no steps to be followed to open an account anywhere. There is nothing that needs to be done from the client's end in terms of KYC and so on. Everything is done from the broker's terminal, from the broker's end directly. So any investor who wants to start their investment journey can do so seamlessly by just logging into their ISEC account, choosing the small case of their choice, investing in it, and getting the stocks directly into their trading and demat account. So now, with that said, we have understood the composition of all-weather investing and how the small case can get rebalanced in different market cycles, and how the SEBI registered professional is able to do that. So now that we have explored that, what we will try to do next is try to understand the rationale or the philosophy behind a basket like all-weather investing. So the idea behind showing you this is to not specifically focus on all-weather investing as a basket, but to give you an idea of how all small case baskets get designed with a particular philosophy in mind. So the rationale behind this particular basket, all-weather investing, was to invest in 3 different asset classes at the same time. As we have seen, it's equity, gold, and debt. And the idea or philosophy behind having 3 different asset classes was fairly simple. One is it reduces risk by quite a significant amount by ensuring that overall exposure is not taken only into the equity markets. And this ensures that the basket or the portfolio is can be stable during different market conditions. And also the kind of investors that it generally attracts, this particular basket, is a set of investors who do not wish to invest in high growth or high risk kind of baskets or portfolios, but want to invest in stable portfolios over the long run. So those investors who choose stability over risk are the kind of investors who come to a portfolio like all-weather investing. So naturally, that brings the next question as to what the portfolio performance is going to be. So it's a fairly, we would say, the best question to ask for an investor before they start their investment journey. So if you see Smallcase as a platform, so we strive to be as transparent as possible to investors. So if you look at the platform, if you head over to the platform and you use your ICICI account to log in, you will be able to see something called as live performance of portfolio baskets. So what do we mean by live performance? It means the real live performance of a portfolio after it was launched and made available to investors to invest. And this particular portfolio is every particular small case which has been made live will be compared with its respective index. As you can see on the screen, all-weather investing, the portfolio's performance is being compared with a benchmark, that is equity large cap benchmark over here. So you can see that this portfolio basically went live somewhere in and around October of 2018, and it has been live up until today. And you can see that the portfolio, that is the small case, is being represented by the blue line, which is all-weather investing, and the index is being represented by the yellow line, which is equity large cap index. Now, in this case, why are we comparing it with the equity large cap index? Why not the small cap index, mid cap index, and so on? So on the platform, the small case tries to be so transparent that it basically understands the constituents of a particular basket or a particular portfolio, and it tries to analyze if most of the stocks belong to the large caps category or the small cap category, or a mixture of both mid and small cap and so on, and respectively decides to compare it with a particular index that suits its or that matches the profile of that particular portfolio. So all-weather investing has index-based ETFs inside of it, which makes the system automatically compare it with the equity large cap index. For example, if we were looking at a basket where most of the stocks were small cap stocks, then the system would intelligently compare its performance automatically with the equity small cap index. So that is the beauty of the system, where the user gets to understand how these baskets perform with its own respective benchmark index, whether it is outperforming, underperforming, or just matching the index's performance. So if you take a look at this particular basket, if we roll back time, during March 2020, we all saw the markets correcting by quite a bit in a very short span of time. So we saw about a 35% correction in the benchmark index in a very, very short span of time, which is represented by the equity large cap graph that you can see on the screen. But at the same point of time, if you take a look at a basket or the basket all-weather investing, you will notice that the correction never really came through in this particular basket. You can see a very minute correction, but that's about it. And overall, this portfolio has given a stable performance, irrespective of whether the market was going up marginally or falling drastically or going up drastically, which we saw post the COVID fall. So irrespective of what kind of market cycle that we were looking at, this particular basket managed to give a very stable kind of performance in all different conditions, which is the reason why it has been aptly named as all-weather investing. So the portfolio is able to accomplish this because of its exposure to three different asset classes at the same point of time. So we know that gold as an asset class is negatively correlated with an asset class like equity. So whenever equity markets tend to go up, gold generally doesn't tend to perform well. And whenever equity markets fall, gold is seen as a safer investment, or a safer asset class by investors, which pushes the price up eventually because participation in gold-based asset classes intends to increase at that point of time. So with this happening, this portfolio and debt is an asset class which generally tends to be stable all the time. So with this happening, any two asset classes out of the three asset classes present in this particular basket are expected to perform moderately well. It could be debt and gold doing well when the equity markets are falling, or it could be debt and equity doing well when the gold markets are not performing well. So because of this inherent hedging or the inherent nature of this particular basket, the basket is expected to perform well during different market conditions. So that is the reason why we are able to see a stable performance. So what we'll try to understand next is some of the key points about this particular basket, that is all-weather investing. So the first point that we can see on the screen is that it is reviewed once in a quarter. What does this basically mean? So we had spoken just a couple of minutes back, we had spoken about what rebalancing is. So rebalancing is a process where the investment advisor who has curated this particular basket basically removes those set of stocks which are not expected to perform well going forward and adds new stocks in its place, which is expected to do well. So this particular act of removing unhealthy stocks and putting in healthy stocks which are expected to do well and making the portfolio more healthy is called as rebalancing, or is called as review on the platform. So when we say that a particular basket is being reviewed once in a quarter, what this means is that once every 3 months on a predetermined date, the investment advisor, the SEBI registered professional, is going to come over, is going to review if the particular set of stocks or ETFs are in line with the portfolio's requirement. If they are in line, then the rebalancing does not go through, so the portfolio is allowed to continue. And if there are some changes that need to be made, for example, the macroeconomic conditions changed or sector-wise news broke out and there are 1 or 2 sectors which need to undergo some changes, then that is implemented on the review date, and accordingly a notification is pushed out to basically anybody who has invested in all-weather investing, stating that something has changed in the portfolio. It could be exposure to 1 or 2 stocks or ETFs becoming less, or it could be 3 or 4 stocks being removed from this particular basket. So when that happens, a notification is pushed out, and through email, through WhatsApp, through mobile apps and so on, and any investor who has invested in any of these particular small cases can click the rebalance and approve it. And once they do that, automatically in their trading and demat account, the set of stocks which need to be removed or where the exposure needs to be reduced will happen automatically, and new stocks also will be bought automatically. So this is the process of a rebalance, and for every small case there will be a particular rebalance or review date mentioned in advance. So for this particular basket, all-weather investing, which we are understanding with an example, the review is happening once in a quarter, and the minimum investment amount starts from 5345. So as you can see, this is again on the 4th of March 2022. So the minimum investment amount varies according to the market condition. So the reason why that happens is because this set of any small case is just a basket of stocks or ETFs, right? So whenever the set of stocks changes, or whenever the price of these stocks tend to fluctuate with market condition, the ticket size of this particular basket also tends to change along with it. So the portfolio, if the underlying constituents of the portfolio become more expensive, let us say tomorrow by 1%, then the minimum investment amount is also expected to increase by 1%, and so on. Similarly, if it decreases by 1%, the minimum investment amount is expected to decrease by 1%, and so on. One more key aspect to note is that this is a free access small case, which means that anyone can access the constituents of this particular small case by logging into their by logging in through their ICICI account and taking a look at the small case. And going forward, now to understand small cases better, what we are going to do is take a look at the second small case as an example, which is something called as the Great Indian Middle Class. So if we take a look at the Great Indian Middle Class, what is it all about? So this is a small case where your investment happens in those companies which are focused solely on the growing middle class population in India. So what does this mean? Basically, if we take a look at some important data, the middle class population in India is expected to increase, and they're expected to result or materialize in 80% of the consumption story that is going to play out in the long run. And the middle class growth or population growth has already started and is only going to increase from here. The middle class population in India generally tends to prefer some set of companies, or they are accustomed to buying their goods and services from a set of companies. For example, if I were to give an example today in this session, all of you might be aware of Titan. So Titan makes its watches, they have their lineup of jewelry products and so on. So the middle class population in India generally tends to prefer Titan as a brand when going for jewelry or watches or whatever it could be. Similarly, if we take a look at automobiles, for example, Hero MotoCorp or in the two-wheeler segment, or Maruti in the four-wheeler segment could be the preferred brand of choice for middle class Indians. So with time, when the population of middle class, when the Indian middle class population starts growing, naturally, the demand for goods and services from those companies which are already supplying to middle class population is expected to grow, right? So this is what this particular basket or portfolio wants to capitalize on. So if you take a look at the composition of the Great Indian Middle Class, sector-wise composition, we can see that automobile has an exposure of about 20%, home electronics 12%, personal products 12%, departmental stores about 20%, household products 12%, restaurants, jewelries and watches, and beverages and paints all have the respective weightages at around 6% each. So as a sector, this particular basket takes its highest exposure to the automobile sector, but at the same point of time has a very diversified exposure into a variety of other sectors, with the largest sector only accounting for about 20% of weightage in the overall basket or the overall portfolio. Similarly, if you were to take a look at the composition in terms of stocks, and specifically stocks alone, for example, in the paint sector, we have Asian Paints with a 6% weightage. In automobiles, we have Bajaj Auto and Hero MotoCorp in the two-wheeler section having a 12% weightage combined. Maruti having about a 10% weightage in the four-wheeler sector, in the four-wheeler sector. And similarly, we can see other companies like Dabur, Whirlpool, D-Mart, which is Avenue Supermarts, Hindustan Unilever, Jubilant Foodworks, Titan, and so on. So all these companies, there are plenty of other companies also. You can directly log into the platform by using your ICICI account and taking a look at these particular stocks directly. So basically, me as an investor, when I want to invest or when I want to capitalize on a theme like the growing middle income population in India, then such kind of themes are available on the platform. So if I want to capitalize on it as an investor, I can go ahead and invest in this particular basket called the Great Indian Middle Class. And naturally, all these set of stocks will get picked up in my own trading and demat account. So all these set of stocks are as of today. With time, with every rebalance, they can change if need be. So as of today, I'm sure any middle income, any viewer who falls under the middle income category in India can recognize at least about 70% of the brands that have been put out here. That is because he or she has been directly a consumer of these particular brands, and this is not going to change. This is going to stay here. So if we want to play out on such a theme, a portfolio like this is available. This is what we mean when we say or when we refer to small cases as baskets. So taking a look at the portfolio's performance or the basket's performance, since it was made live, which is in 2016, this particular basket from a notional value of 100 has the portfolio's value has become 254, which means that over a period of about 6 years, this particular basket has managed to give a 154% return. Whereas during the same period of time, if we take a look at the large cap index, the return has been at around 113%. That is, 100 has become 213, which means it's a 113% return. So as we can see, this particular basket has been outperforming even the large cap index for quite some time now. And it is only consistently outperforming the particular index over a variety of different market cycles, which this particular portfolio has seen, and so on. So any investor can basically take a look at the portfolio's performance on the platform, and they can gauge whether this is in line with their expectation. That is one, the portfolio's performance, and second, the philosophy with which the portfolio has been designed, and third, with respect to the minimum ticket size or the investment amount. So if they're comfortable with it, then that would be the portfolio of their choice. So some of the other key things to note about the great Indian middle class is it is reviewed once in a quarter, just like all-weather investing. It is closely monitored once every 3 months. The investment advisors are taking a look at this particular basket. The minimum investment amount starts from 75,000. So as we can see, there has been quite a shift from the minimum ticket size that was required for all-weather investing versus something that is required for the great Indian middle class. So the reason for that being that the great Indian middle class is taking exposure to a variety of different sectors and quite a lot of stocks. So because of this, the ticket size of the basket is increasing. And one thing to note is, again, this is a free access small case. So anyone who wants to go ahead and take a look at the constituents of this particular basket can feel free to do so without any obligation to pay any sort of charges whatsoever. So coming to who should invest in the great Indian middle class, that is investors who wish to capitalize on the growing middle income population in India, and those who are generally okay with medium levels of portfolio fluctuation. So this is an all equity portfolio. That is, this portfolio takes 100% exposure to equity, and it does not diversify itself in terms of different asset classes, because that is the nature of this particular portfolio. It only wants to capitalize on the growing middle income population in India. So it is neither categorized as high risk or high volatility, and neither is it categorized as low risk or low volatility. It's a medium risk, medium reward kind of a basket. So those who wish to invest in such baskets, or those who are comfortable with these kind of baskets, can feel free to do so. So coming to more examples of small cases available, let me reiterate that there are a variety of portfolios or baskets on the platform with so many different types of themes and ideas, which goes behind designing them. But some of the other examples, for those of you who wish to understand, we have a basket called all-weather investors. Sorry, we have a basket called dividend aristocrats, where we invest in those companies which have consistently been increasing their dividends in the long run. So we know that dividends is an additional source of income for investors, right? And dividend-based companies generally are healthy. That's the reason why they're paying out dividends. And they, over a period of time, tend to give higher alphas or higher returns when compared to any benchmark index. So dividend aristocrats is that kind of a basket where those investors who want to, who are excited about dividends can go ahead and pick up this kind of a basket. Similarly, we have another thematic basket called rising rural demand, where we invest in those companies which have a very strong foothold in tier 2, tier 3 cities in India, the consumption stories that are playing out in rural India and so on. So one data that I would like to put out here is that rural India basically is consuming goods and services at 1.5x or 1.5 times the rate as that in urban India. So if somebody wants to capitalize on that, then rising rural demand would naturally be the kind of small case basket that they would be comfortable with. Similarly, another exciting theme that we have is something called electric mobility. So as of now, we have started seeing quite a lot of players coming into the market. For example, you can think of Ola, which is trying to disrupt the two-wheeler electric market in India with their Ola S1 and S1 Pro and future lineups that are coming in. Similarly, we have Simple Energy trying to disrupt the market. We have Ather, and we have plenty of other brands trying to come in. And we also have traditional players like TVS Motors, Hero MotoCorp, and so on, who have started taking or who started making their investments into the electric space because they see the potential there going forward. So we all know that the consumption for basically electric vehicles is naturally going to grow in India. So we have created a basket called electric mobility, where we invest in only those companies which have or which are taking a huge part in the electric push that is happening in India. It could be through direct production of electric vehicles. For example, something that Hero MotoCorp and TVS have already started doing. And it could also take exposure to ancillary companies which are supplying, for example, parts to these particular manufacturers. So it could be battery parts, it could be any sort of components and so on. Or it could even be something like solar energy, which is actually kicking in right now. So electric mobility is that kind of a portfolio which wants to capitalize on the electric push, overall electric push that is happening in India. We all know that it is going to play out in the long run, that oil and natural gas, or whatever it could be, will not be the long-term solution for the demand that is coming out there for clean energy. So themes like this, or ideas like this, or strategies like this generally is available only on a platform like Smallcase. And those who wish to capitalize on such kind of themes can basically come on the platform. They can take a look at all the themes that are available, all the strategies and ideas that are available, and they can go ahead and look at the portfolio's performance, which is the best part. So there are two types of portfolio performances also on the platform. One is historical performance, where we basically test the strategy and try to find out if the strategy is applicable in how would have the strategy been performed. How would the strategy have performed during different market conditions? So it's just a back test. And also the live portfolio performance, which we saw today. So both the performances are available on the platform for the sake of transparency. And those who only believe in live performances can feel free to do that on the platform. They can check for how long this particular small case has been in existence and how has it performed against the benchmark index. And you can also test this during different market conditions. In the last 3-4 years, we have seen all sorts of market conditions, super bearish markets, super trendy markets. We have also seen fairly stable markets just prior to both of these. So investors have the flexibility of comparing how these baskets tend to perform during different market conditions. So some of the key advantages, like I've already been mentioning about Smallcase, starting your investment journey through Smallcases, is there are a variety of portfolios available on the platform. So if you just use your ICICIdirect account to log in, there are about 36 portfolios that have been designed that you can make use of. Similarly, we have multiple filter options. For example, we have volatility, investment amount, strategy, returns, etc., to make your investment process easier. What do I mean by this? Let us say that I, as an investor, I want to identify only those kind of baskets or those kind of portfolios which are low risk in nature. So we term those kind of baskets as low volatility baskets on the platform. So anybody who wants to invest in a low volatility basket can come over to the platform, and on the left side, they will see the filter section in which they can choose low volatility as an option. And they will only be provided with those small cases which have been categorized as low volatility, because it could be different asset classes, it could be time tested that it's a stable portfolio and so on. Similarly, if somebody wants to take a look at high risk, high reward portfolios, they can come on the platform, click on high volatility, and they'll be shown those kind of portfolios along with the portfolio performance. Similarly, medium volatility is another option that is available. So that is one feature. So somebody, if an investor wants to try to segregate his investments based on risk as the first criteria, they can use volatility as a metric. Similarly, investment amount is a metric where people who can choose to, let us say that I as an investor, I want to start with a minimum investment or a minimum ticket size of 25,000. On the platform, I need not go through all the small cases and take a look at what the minimum ticket size is for every small case. On the left side, you will find the filter section. Over there, choose investment amount, any investment amount you want, and all the small cases that are fitting into that criteria will come over there. Similarly, if you have a particular strategy in mind, you can choose that in the check mark boxes, and you will find that particular strategy's small cases shown there. The strategy could be growth, income, debt. It could growth, income. It could be something like dividends. It could be thematic by nature or sector composition by nature, and so on. Similarly, if an investor wants to track his small cases using returns as a criteria, for example, let us say I as an investor, I want to choose those kind of small cases which are given the best performance in the last 1 year. I can do that on the platform. What if I want to choose those kind of small cases which have given the best performance in the last 3 years? Done. 5 years, done. All these check marks or all these filters are already available on the platform, which makes it fairly easy for you to choose a variety of filters and try to find the small case that fits your requirement. So that is about some of the key advantages going for a small case investment. Similarly, if we take a look at what else you can do on this particular platform. So as you can see, flexibility to choose the investment amount you're comfortable to start your investment journey. It doesn't mean that if a particular basket has a minimum ticket size of 5,000, that you will only be able to start with 5,000 or multiples of 5,000. If we say that the minimum ticket size is 5,000, that means you can start with 5, 6, 7, or any amount, any higher amount of your choice. So that flexibility lies with you as the user. And like we have already discussed, the platform feature allows you to check the portfolio and the strategy's performance across different market conditions before you actually start your investment journey. So next, we will try to understand how we can start our investment journey on a platform like Smallcase. So first, you'll have to head over to smallcase.com and log in using your ICICI credentials. So once you do that, a list of all the small case baskets will be readily available for you. You can take a look at that and select the small case of your choice based on whichever philosophy you're comfortable with, whichever I would say set of returns you're comfortable with. Once you do that, most of the job is already done. You just have to click on invest now and proceed with whatever steps are being shown. So the entire process of investing, once you decide on which portfolio you want to select or which portfolio you want to invest in, the process after that does not generally last for more than 2 minutes. So your investment starts within 2 minutes, and all the set of new stocks that you have chosen in your particular small case will be credited or will be bought in your own ICICI trading and demat account. So you will be the owner of these set of stocks. So that's how you can start your investment journey very quickly using a product like Smallcase. So some of the other key, So what else do we need to know about Smallcase as a platform? So we have already covered tracking performance. Apart from the overall growth, some of the graphs that we already saw, what you can do is also check the daily change in the portfolio's performance. So even if there's a 1 or a decimal level change, for example, 0.2, 0.3% on a day-to-day basis, that will also be shown to you on the platform. Apart from that, we show CAGR for the portfolios. So CAGR stands for compounded annual growth rate. It basically shows us investors what is the average return that a portfolio is able to generate over a period of time on a yearly basis. So for example, if one portfolio gives 10% return the first year and 20% return the second year, the CAGR could be somewhere around 15%. So I'm giving you an example to make you understand. So CAGR like that is shown on the platform for all our portfolios, and these are live CAGRs only, which means that you're able to see the CAGR being calculated only on the live portfolio's performance. Apart from that, there is a feature called news, where we basically show investors news related events only for the set of stocks or sectors that they own. So right now, we know that when we log into any news portal or any business news channel, we are bombarded with so many news events which might not even be related to our portfolio. So what would make sense is kind of news flowing in only for those set of stocks that we own. So that is a feature that has been made available on the platform. Similarly, you can track your minimum investment amount is something that will be displayed to you. So you can choose which small case you want to invest in, depending on whether or not you're comfortable with the minimum ticket size. Past performance, we have already discussed. Similarly, rebalancing is something that we have covered in detail, where the SEBI registered professionals will be managing the portfolio and you can also take part in it. Similarly, we have two more options, that is invest more and set up SIPs. So invest more allows you to basically come in the future at any point of time and just increase your investment in any small case that you've already invested in. For example, if you've invested in the great Indian middle class today with a minimum ticket size of 75,000, and let us say that it takes you another 6 months to accumulate another 75,000 to invest in that particular basket. So you can feel free to wait for 6 months. Once that capital is, once the funds have been arranged from your end, you can go ahead, directly log into the platform, click on the small case of your choice, which you've already invested in, and click on invest more button available there and just invest more into that particular basket. It is as simple as that. For those of you who wish to set SIPs, which is a more disciplined form of investing, where a certain capital is allocated every month into setting up or into an SIP into a particular small case, that is also allowed. So you can go ahead and set up SIPs on the platform at your discretion. So these are some of the key important concepts or features that are available on the small case platform. So what we're going to do right now is take a look at how we can use our ICICI account to basically identify the small case of our choice, and we'll also take a look at how we can proceed with the investment journey. So to do that, what I have done right now is through my browser, I have come over to smallcases.icicidirect.com. So over here, under Discover, we will see the all small cases option and the collections options. So under collections, you will have different kinds of collections like ideal for new investors, ETF-based small cases, long-term small cases, and sector trackers. If you head over to all small cases, basically you will have you will be able to see the list of all the small cases which have been listed over here. So you will be able to see the small cases performance in a one-shot glimpse review on the right side over here. So you will see the 4-year CAGR for all weather investing as something around 12%. You will see the top 100 stock CAGR as around 15%. Dividend aristocrats as 21%. This is a small case that we spoke about in this particular session. And we will also see small cases such as growth and income, infra tracker, electric mobility, which we had spoken about, and so on. So all these small cases will be listed here. Now, for those of you as investors who wish to segregate small cases based on volatility, as we had already covered, what you can do is head over to the left side where multiple filter options are available. So if you click on low volatility, you will be displayed those small cases which are categorized as low volatility or low risk kind of portfolios. Similarly, you will have high risk, high reward small cases categorized under high. You will have medium risk, medium reward categorized under medium. Similarly, if you wish to start your investment journey with under 20,000 rupees to start off with, what you can do is under investment amount, you can choose the under 25,000 option. And you will be presented with all those small cases where the minimum ticket size, as you can see on the screen, is under 25,000. So if you wish to start it with a very low ticket size, just to get a glimpse of how small case investing works, you can click on under 5,000 and you will be able to see that particular or those particular details mentioned over here. Similarly, if you have a strategy predefined in your mind, what you can do is come over to the investment strategy section and choose the strategy that you are comfortable with. For example, if you're comfortable with dividend based investing, you can click on dividend, and those portfolios or those small cases which are categorized as high dividend paying small cases will be listed over here. Similarly, if you're a fan of asset allocation, where you wish to invest in different kinds of asset classes, then you can choose asset allocation as the investment strategy, and you will be presented with those small cases which fall under that particular criteria. Similarly, we have a lot of investment strategies listed here on the ICICI platform, and you can take a look at all these strategies that are listed over here and find out if your investment philosophy or your risk requirement fits in well into that particular strategy. Similarly, some of us as investors might be more keen on exploring small cases based on returns rather than on risk or investment strategies. In such cases, we have something called as the sort by functionality over here on top. So if you click on sort by, you will be able to see returns over here, and you will be able to segregate small cases based on their 1 year return by clicking 1 year over here. And you will be able to see all the small cases displayed in the order of the highest to lowest return in the last 1 year. Similarly, you can click on 3 years to find out the 3-year return based small cases. 5 years, if you wish to track the best small cases which have given the best kind of returns in the last 5 years. So this is how you can use the filter options that we had discussed in this particular session. Also, how is it that we as investors can understand a particular basket better? So to do that, what I'm going to do is click on any small case of my choice. For example, in this case, I'm going to take a random example of dividend aristocrats. So I'm going to click on dividend aristocrats, and I will be able to see the name of the small case mentioned over here, what the small case does in one single line mentioned over here. So here we state that the investment is happening in companies that have been consistently increasing their dividends, which we had spoken about. The 6-year CAGR or whatever the live CAGR is for this particular basket will be mentioned here. So we can see the 6-year CAGR as somewhere around 21%, which means that on an average, it is giving investors roughly a 21% return year on year. And the category of the small case in terms of risk will be mentioned on the right side here, which it says clearly is a medium volatility portfolio for this particular basket. Now, the overview section basically shows the investor why somebody should go ahead and invest in that particular basket. So the question of why needs to be addressed all the time. So whoever has designed this particular basket, whichever SEBI registered manager has designed this particular basket, would have given a brief overview of why somebody should invest in it. So we as investors can read this particular section, go through it, and find out if this particular investment strategy fits into our own set of rules and guidelines that we have made up for how we should go about investing in the markets. Similarly, if you want to know the performance of the particular basket, all you have to do is scroll down, and you will be able to see in the examples that we saw, we were able to compare the particular small case with respect to a benchmark index, right? So that is something that will be visible over here. So for every small case, you will find 2 graphs. That is the blue line, which represents the small case. In this particular example, is dividend aristocrats, and the yellow line, which represents a benchmark index. In this case, it is equity large cap index. So you will be able to see the performance metrics, and you will be able to track that over here. You will be also able to see the date on which the portfolio was made live. For example, you can see here that it was launched on April 7th of 2016, and how the portfolio's performance has been so far. If you wish to track the 5 years performance, last 5 years performance, you can click on 5 years. Last 3 years, click on last 3 years. 1 year, you can click on 1 year. 6 months, 3 months, 1 month, live, max, and SIP based performance. All these options will be available on the platform for us as investors to be able to experience it, understand it, and then take a decision of whether we want to invest in it. The next feature of the platform is where we show the minimum investment amount. So the minimum investment amount will be always mentioned on the right side, and it will be mentioned in rupees as always. So you can see that this particular basket has a rupees 40,000 minimum ticket size, that is as of today. And this amount can change with market conditions. And for those of you who wish to understand the stocks and sectors that this particular basket is participating in, you need to click on stocks and weights. Please make sure that you've already logged in to your ISIC account when doing this. Otherwise, the stocks and sectors will not be displayed. Once you've logged in, it will be displayed. So you will be able to find all the sectors in the pie chart over here. So you can see that for this particular basket, exposure is being taken to the paint sector, oil and gas sector, diversified chemical sector, and so on. And the percentage weightage will also be mentioned here. Simultaneously, every sector will have a list of stocks inside of it, which it is taking exposure to. Those stocks will also be mentioned right over here. So we as investors can track these kind of details in one particular view or in a single snapshot. So the rebalance or review dates, which we had spoken about, these specific dates on which the review or rebalance is going to take place, will be mentioned right over here under stocks and weights. You can see that constituents of this small case were last reviewed on September 15, 2021, and will be next reviewed on September 15, 2022, which means that this particular basket has a 1-year review frequency, which means it is reviewed by the concerned SEBI registered manager on once in a year basis. So similarly, it could be quarterly, it could be monthly, it could be annually, it could be whatever it is, depending on how the investment advisor or the fund manager has designed it. So in this case, who's going to be the investment advisors? To take a look at that data, if you come to overview section, you will be able to see that particular data over here. You can see that it has been created by Windmill Capital. So Windmill Capital is the SEBI registered entity which has curated this particular basket. So I hope that that particular element or that particular feature that is listed on the platform is clear to you as investors. So similarly, the news sector here, which we had spoken about, basically shows sector and stock specific news that we are holding in our small case basket. So for those of you who wish to understand even more about a basket before investing, what you can do is click on the fact sheet over here. So when you click on the fact sheet, a separate tab opens up where you can download a PDF directly on your desktop. And this PDF will have details about who curated this particular small case, their name and logo over here, in this case, Windmill Capital, what the name of the small case is, which is listed here, what it does, volatility, KEGAR, the rationale behind how the small case was designed, the methodology which was implemented at the time of designing it. So how the set of universe of stocks were defined, what was the research criteria that went into it, how were the set of stocks screened, what was the weighting mechanism, are all the stocks equally weighted? For example, do all stocks have 10% weightage or 20% weightage in the portfolio? Or is it a kind of portfolio where the best performing stocks have the highest kind of weightage? For example, a stock could have 20% weightage, the next stock would have 17% weightage, up until the last stock having 5% weightage. Is it kind of a portfolio with a customized weightage? That will be mentioned over here. How long the historical backtesting has been done and whether it has outperformed or not will be mentioned here. The rebalance frequency will be mentioned here. And some of the ratios which you as investors might be interested in. For example, PE ratio of the small case as against the benchmark index will be mentioned here. Price to book, Sharpie, dividend yield, all these details will be mentioned here. Similarly, if you scroll down under important fields, you will find the inception date and the launch date mentioned here. Launch date basically tells the investor when the portfolio was made live and for investing. And inception date basically shows since when the portfolio strategy has been backtested. So the most important data for us as investors would probably be the launch date and the kind of market cap category it belongs to. That will be mentioned here. So you can see that it's an equity large cap index that is also shown here, where the under market cap distribution, we can see that large cap has the highest weightage of 77%. So under review frequency, we can see that this has an annual review frequency, and it was last reviewed and next reviewed on these particular dates, which have been mentioned here. So if you scroll down, you will also be able to see the same graphs. Steps to investing in this particular baskets clearly shown here. And you will also be able to see other details such as how the KEGAR was calculated, how the volatility tags were assigned, and so on. So for those of you who wish to take a detailed analysis or approach towards identifying the small case basket, you can do so by clicking on the fact sheet button over here. So if you wish to proceed with your investment, once you have logged in with your ICICI account, please make sure that enough funds are available in your ICICI account before you proceed. So once you have made sure of that particular factor, what you can do is click on invest now, and you will be given two options. Either you can go with a one-time investment, or you can go with SIP as your preferred choice. So for those of you who wish to start an SIP or a systematic based investing, what you can do is click on monthly SIP. And as you can see here, the first investment of the minimum ticket size of 40,000 needs to be done, post which SIP installments of rupees 9,000 can be started. This is for this particular basket. There are plenty of baskets with different ticket sizes of minimum investment and of SIP installments. So if you do not want to set up an SIP and want to go for a one-time investment, please click on one time, then you can click on confirm and you can proceed. So you'll have to follow the step-by-step process that is shown in, and it will make sure that your investment happens within about 2 minutes of just following the steps that are handed out to you. So with that said, I hope that small case investing as a feature and as a platform is now clearer to you as investors who have tuned in. If you have any further queries about how to go about your investments, or whether or not a particular small case basket is fitting in your requirements, what you can do is call up your relationship manager, your assigned relationship manager at ICICI, and they will be able to guide you better on this particular process. So with that said, I hope that this particular session has been enlightening about small case as a product and as an investment vehicle for your requirements. So thanks a lot for attending today's session.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.